Welcome to Starseed Academy. This is our first ever live session where we're going to go over the basics of Meteora, DLMMs, and how to use Starseed command to facilitate all of that. Today, we are joined by me, Batman, the CEO, and then I have my COO here as my co-host. A little bit about me. I've been a full-time trader in the crypto and traditional market space for over 5 years now. And I got into liquidity providing about a year and a half ago on Meteora. I'm also a proud LP member in the LP Army member in the Meteora community. And I'm super excited to be here today to spread the gospel of Meteora and Starseed. But Razor, I'll let you introduce yourself as well.
Sure. I'm Von Razor. I'm the Chief Operating Officer for Starseed. I work with Batman really on all things with our project here. I've been also trading for about 5 years, been in crypto intensely since 2021, and getting close to, for me, being an active DLMMer in the last year. So it's been really cool to see that as a way to really make my resources and my capital work for me. I'm an active member of Starseed, active member in the LP Army communities, as well as a big stan of the Believe ecosystem too. So
Yes, we do love Believe over here. But that actually kind of takes us into the next slide because yesterday we officially partnered with the Meteorite Collective, which for anyone that doesn't know, it's an initiative that's really pushed by Meteora that provides grants, strategic marketing, and growth support to innovative projects like Starseed that are building in the Solana Meteora ecosystem. And that includes a lot of Believe projects right now that are really pushing this new innovative ICM type market. So yesterday we officially partnered with them and won their one of 3 projects actually that won their hype fund, which is specifically a utility driven award for projects that are being innovative in the utility space. So that's really awesome. Really grateful to the Meteorite Collective and people like Vesper and Soju that have been absolutely instrumental in giving us great advice as we continue to build out Starseed. So this is our agenda for today. So we're going to give you a quick little primer on a few things, one being Starseed, of course. We're going to give you an overview of our dashboard. Of course, you'll see a lot more of that when we do our live trading session. We're going to talk about our seed token and our utility. And of course, for a lot of people here that might be new to LPing, we're going to do a little deep dive on Meteora and DLMMs. Then we'll have a quick Q&A session where we'll field questions from Twitter, YouTube, Discord, Telegram, anywhere really, and answer anything that you may have. And then we'll move on to what might be the more exciting part of the show, the live trading session. Hopefully we hit a banger today. But of course, if not, then I guess we'll just go over theory.
Feel free to ask questions at any point during the live stream. We should be able to see your comments, your questions, and we'll of course have a Q&A session. But if you have a good question at any point, we'll be happy to address it then. And again, this is our first time running Starseed Academy, our boot camp, our educational experience. So if you have feedback for us, feel free to send it to us in our DMs, in our Discord, as we continue to refine Starseed Academy. This won't be the last time that we're doing streams like this. So we want to continue to improve and iterate on it. That's our entire ethos here at Starseed, continuous improvement. So definitely am open and receptive to your feedback.
Yes, well said, Razor. So let us get into it, starting with Starseed command. So What is it? So Starseed Command is our trading suite. So this is our all-in-one dashboard that is super customizable. It's widget based, which you will see in a bit. And essentially, what we wanted to do is create a trading system that didn't really exist in the space. And that's one that you can build that's unique to your trading style. So if you are a scalper that just likes to trade new and hot tokens, you can set your dashboard up to do that. If you are a DLMM player on Meteora, which we're hyper focused on, our product is perfect for that. We also let you track the performance of all your plays. We have Hive, DLMM position viewers, and P&L cards and all that. So we really give you the tools and the utilities to take your trading to the next level. We also have a lot of screeners that have been great and instrumental for a lot of folks early on to make great plays, regardless of really their skill level when it comes to DLMMing. We like to give people a guiding hand when opening positions, and you'll see that during the live trading demo. Um, and really see just how powerful Starseed can be for both your kind of newbie user, but also your power user. We try to cater to all play styles and skill levels.
Big
So,
picture,
yep.
big picture. Our mission as Starseed and Starseed Command is to be your one-stop shop trading platform. So bring everything, the best of what Solana has to offer to one place so that you can focus on just trading using the tools you're already familiar with, and so that you can keep winning in less time juggling between a dozen different windows. So right now we're hyper focused on DLMMs. That's just because of our background, as we alluded to earlier. But we'll continue growing Starseed Command in the platform with more tools to adapt to your particular trading styles. So again, we're open to more feedback and ideas on where we should go next.
Yeah, and that actually leads me to our next slide here. So this is what the dashboard looks like. As you see, it's widget based. You can have multiple different widgets here. We have a few like the price chart, an LP positions tracker, our top pools widget, which is super popular with folks that want to find high performing pools. But essentially, this widget system lets us iterate very quickly if there's a new hot service or a new hot feature that Jupyter drops, like their Jupyter Pro widget, which is kind of hidden here by our AI assistant, but you'll see that in the live trading. We can add that very quickly. This widget system lets us iterate very fast. So if there are projects out there that want to partner with us and they have something that's interesting, uh, as long as they have an API or something of that nature, we can typically integrate that project into our system very seamlessly. So this type of build, I think, really, really lets us capture new metas and new hypes as they pop up. But essentially, like I said, this is what our dashboard looks like. Of course, we're going to go into greater depth as we do our live trading session. So we'll show you how to set it up, how to trade on it, um, and it'll be a wonderful time. So that leads me to the next slide, which is our seed token. So Starseed, we launched a token earlier this month. I believe it was July 2nd. Correct me if I'm wrong, Razor. And we've already added utility for the token. So right now, the biggest thing we added was a discount on trading fees on our platform. So whenever you claim your fees on our platform, you get charged a fee. But of course, if you're holding tokens, that fee drops substantially. And we only charge fees on profit. So if you didn't have a profitable position, we are not going to be charging you a fee on any of those fees you claim, just because they'll just put you more uh, into more of a net negative spot, which no one really likes.
We're here to help you win.
Exactly.
So we don't wanna hurt you more if we've stumbled into a bad play together.
Yes, yes. We don't want to destroy the port even more. But this is just the first of many various utilities that we're going to have for the seed token. As you see in the next month or two, we're actually going to be releasing a very big update, and being a seed token holder is going to be very advantageous. I'll just say that much. Um, and we're also going to be dropping a post tomorrow regarding the enhanced flywheel nature that we're trying to experiment with here at Starseed, which should help drive value to the token. So we're all about driving utility. We're to our platform and our token, um, and we're very excited to see what's going to come of that in the near future.
Oh, Batman! No one came here to hear us talk about seed. Come on, let's
Yeah, that's
let's
true.
talk
That's
about
true.
make let's talk about making money with Meteora.
Yes, yes. So this is the bread and butter here. So this is probably my most favorite tool that I've ever used, besides Starseed, of course, in all my time here in crypto, and that is Meteora. And they are both a liquidity providing platform and a launch pad. So as far as the liquidity providing goes, they offer the DLMM service, which we'll go into more in the upcoming slides. And they also offer the DAM V1, which was just their dynamic automatic market maker. And this is the same as their dynamic pools, if you remember that. And that's typically your constant product AMM or auto market maker. And in those dynamic pools, you put up two sides of liquidity. But sometimes you're allowed to put up one. Like if you went into the USDC, USDT pool, you can either put up USDC or USDT. And you get yield in those pools from things like trading activity, and they also lend out their funds in order to boost that APY. And their new, kind of popular offering now is the DAM V2, and that just came out recently. And this is also a constant product AMM, like the DAM V1. However, it's different because uh, it concentrates your liquidity a bit more, and it also has some awesome features in it, like an anti-sniper feature, and it also has a dynamic fee curve to it, which if you're not familiar with that, so when you launch a token with a DAM V2, you can have two forms of fee curves on there. So you can have a logarithmic or you can have a linear fee curve. And essentially, the fees start off at 50%, which is absolutely juicy if you are able to provide liquidity that quickly. And then it slowly trails down to a very low percent over time. And that's been a fantastic option for new launches. Um, and you can quickly make gains on that if you know how to play it right. And the other features they have, which are also I wouldn't say they're like super popular, but a lot of people still play them. You've got their alpha vaults, or you got their stake to earn. You got the dynamic vaults. Um, you've also got the Meteor lock, which is pretty cool, which is something we do use, and that's just a way to lock up liquidity either permanently or on a vesting schedule. But the three main things are the DLMMs, the DAM V1 and the DAM V2, with the most popular ones probably being the DLMM and the DAM V2. And then the other thing that Meteor does is they help with launching. They're a launch pad. They work on the DBC, which is the dynamic bonding curve, which is absolutely awesome. Like I said, with the DAM V2, you've got that dynamic fee that helps with earlier price action. You can set customizable price curves, and typically in a DBC launchpad, things will graduate to the DAM V1 or DAM V2 with Believe, actually, they are a DVC launchpad, so they built on the Meteora tech. A lot of things have been Jupiter Studio with the very very popular Uranus token. I'm sure many of you have seen that in the ecosystem trending. All of that built on Meteora tech. Meteora tech is awesome like that. Um, and it's a very powerful tool, very popular. and it's one of our favorites. That's why we've kind of hyper focused our tech to providing a seamless and great service and a and an adjunct really to Meteora, so you can really capitalize on all its greatness. So we can go over to our next slide, which is what are DLMMs? So the DLMM, or the dynamic liquidity market maker. This is just your way to concentrate liquidity in a specific price range. So this is different from the DAM V1 and V2. Here you have your full power to concentrate liquidity in whatever price range you want. And this is absolutely great because it enhances trading efficiency by offering zero slippage through those bins. And the great part is you can earn fees for providing that liquidity. So you're essentially making your bags work for you in a very, very great way. Um, so we can go over to the next slide here. And this is the DLMM window that you're going to be greeted with on Meteora. So we've broken it down and we're going to go over each part over the next few slides. So the first part is the Sol USDC pair that you see there. So this is the token pair for that pool that we're going into and that we're going to demonstrate over the next few slides. And typically, you see the reminder here. So these token pairs exist as that little A B layout. And that's just going to make it easier as we go over the next few slides talking about things like bin steps and whatnot. So here, the Sol USDC, think of the Sol as token A and the USDC as token B. Um, and then for two, that's the 24-hour fee for TVL. And we'll go into greater detail here about that stat, but that's basically the ROI percent that pool is getting over 24 hours based on whatever TVL you put up there. Three is just the general pool information for the pool and various stats that that pool has. And then four is going to be a very important section, and that's your liquidity providing info. So that's where you'll find out your range, the liquidity that you want to put into bins, and we're going to do a deep dive onto that coming up. So this is the pool information. So here you are met with six different stats on that left window. So here you have the total TVL in the pool. This is a very good number to keep track of because sometimes if it's too high, then essentially if you're going in with a small amount relative to the total value locked, sometimes the fees might not be that great unless you really concentrate your liquidity into a very short time frame or sorry, price range. And then you just have the allocation of the various tokens in that pool. And then the most important stuff are the six stats that you will see right here. So you got your bin step, which will be the distance between those price bins, and we'll go into this in like very great detail in a few slides, just because that's a very important thing to know. You've got your base fee, and this is the minimum fee that you will earn on every trade that goes through your swap. So things like Jupiter, they work on the Metis router, are currently they actually upgraded to Metis 1.6. And that works by going into pools with high liquidity. So it'll route pool trades through those types of pools. And oftentimes, a lot of those pools are DLMM pools, thanks to the LP Army for providing a lot of liquidity for a lot of these launches. A lot of those trades will get routed through Meteora. And on every one of those swaps, in this example, you would earn 0.2% on each of those swaps, which really adds up. It can add up very fast. So that's amazing. And then the max fee, that's just the max fee that the pool can run up to. So it's always going to be 10%. And during times of high volatility, which is high volume essentially, um, in terms of like huge buys and whatnot, that dynamic fee which you see down below, which is the fee of the current pool, can fluctuate between the base fee and the max fee. So during those times of high volatility, you're going to see that dynamic fee kind of go up. So the base fee always 0.2% in this example. But during those times, it could run up to 0.3, 0.4, 0.5, sometimes all the way up to 10, which is absolutely fantastic. You'll see that a lot of the time on a lot of low market cap tokens that people are DLMing that are doing like 10, 20, 30, 40% price swings with each candle. You'll probably see something like that where the dynamic fee runs up like crazy. Um, and then you've got the protocol fee, which is just 5% of the dynamic fee, and that's just the fee that goes to Meteora. As you see, it's a very small amount here. You really won't even feel it on your end. And then the 24-hour fee. So this is the like I said earlier. This is the fee the pool is generated in 24 hours. But here at Starseed, we don't really like this metric too much. Uh, because the average ROI percent that you've earned over 24 hours can be very much gained, so to speak. So like this percent here that we saw in the previous slide, the 0.48%, um, that can be very much dependent on volume that happened earlier in the day and not the current rate. So depending on how tight or wide your range is, your own 24-hour fee per TVL can either underperform it or overperform it by a huge margin. So that's one metric we don't really pay attention to. Granted, there are edge cases and outliers where it kind of does make sense. Sometimes with the Sol USDC pool, uh, with just how stable it can be sometimes. The 24-hour fee percent here is sometimes okay. But for meme coins and whatnot, which could have had volume earlier in the day versus later in the day, that number is very much not that great. So that's one I probably would ignore.
I feel
And
like it's
that's
mostly only useful, like you said, for a major altcoin pairing like
yeah.
Sol USDC, or maybe some of the other micro cap tokens that you'll see that range in the hundreds of millions of dollars of market cap.
Mhm.
If you're trying to rebalance yourself frequently so that you're constantly in those DLMM ranges earning fees. I think those are probably like the main reasons you'd look at a 24-hour fee.
Yep, correct. Yeah, I would agree with that. So for our next slide, okay, yeah. So this is the liquidity providing windows. So the top part, you will see the liquidity that you have provided specifically, both in token A and token B. Your total liquidity will fluctuate based on the price of the token. So just keep that in mind. And then the fees earned are just the fees that you've claimed, not necessarily the fees that you've sold. So you could claim the fees for a token and that token nukes, but the fees earned will still stay the same. And then your current balance, that's just the amount of tokens that you put up, either an A or B or both. That will also fluctuate as the token goes up and down out of your range. So, for example, if you went all USDC sided here and the token dumped, you will see that you will have all sold, for example. And then as those swaps happen, you'll see in your unclaimed fees that will slowly trickle up. But that's a pretty simple window there. Where it gets really interesting, though, is where you get to pick your strategy. So here they give you three main strategies to pick from. So you've got your spot, your curve, and your bid ask. So with the spot, as you can see, it's a uniform distribution. Curve, it concentrates your liquidity at the current price. So whatever you open the pool at is always going to be considered the current price. And with the curve, that's where you concentrate it. Um, so this is a position that will probably scale you out or in very quickly, just because it's using a lot of capital in the beginning around that around the current price. And then the bid ask, of course, is an inverse curve, and this will scale you out at a linear rate and use more capital towards the end or away from your current price. So we can kind of break these down a bit more. So typically for your new user, we kind of recommend going either spot or bid ask, just because with those two, if the token does move against you, if you're just saying going soul sided, um, at least you're not going to have a very high cost basis for the token. So as far as cost basis goes, Curve will give you the highest cost basis for the token. Bid ask the lowest, and spot it's somewhere in between. But personally, I think if you're a new user, spot is probably the way to go, or bid ask, just until you can really refine your methodology. And then, if of course, if you're really going for a high risk appetite, curve is a really great way to maximize fees, maximize which in turn maximizes things like the Meteora points. If you're concerned about airdrop stuff, Curve is what I like to do most of the time, just because I really like getting those high fees in a quick scalp. And we kind of labeled it here. So we got the B and A. And as you remember from the earlier side, we've got the A B pairing for these tokens. So if I go back a few slides, just so you can see that again, the Sol USDC up top, we've got Sol as token A, and then USDC as token B. So here we have examples for double-sided liquidity. So we're putting up both Sol and USDC. And this is the distribution they would have for each of these strategies. Now, of course, you can combine strategies and do something even crazier with Meteora. A lot of times you see people doing some combination of curve and spot, or bid ask and some spot, just as a way to capture liquidity differently. And these all have their use cases, of course. And as you may recall, I said in a previous slide, the router that Jupiter is using is called the Metis router. And what it does is it prioritizes price action through these DLMMs based on liquidity. So as you can probably tell, if you're providing something like Curve, you're going to be providing a lot of liquidity around the current price, which means you probably will see more movement in something like a Curve, just because it's stacking liquidity so much. And of course, routers like Jupiter will want to provide better price action for their traders. So something like Curve, I think from what I've experienced and what I've tested, generally sees quicker price action, just because of that fact.
Let's zoom out for a minute. Like, what's like the big picture of why you would choose any of these strategies? You'd want to pick your strategy and divvy up your liquidity based on where you think you're going to make the most money and earn the most fees, right?
Hmm.
So you do that. The beautiful thing with Meteora and DLMMs that makes it different than pretty much every other liquidity providing platform is that you get to decide where you concentrate your liquidity. So if you think there's going to be a lot of volume around a very specific price point, maybe a token is reaching some kind of I don't know, point of mental interest, like, oh, it's about to hit 100 million market cap and it's going to range around there for a little bit. You might open a curve position at 100 million market cap because you want to concentrate your liquidity at that point where you think the highest amount of volume is going to be occurring. Or if you think that your position is the token is going to wildly vacillate and range, go between highs and lows, a bid ask strategy probably works a little bit better because then you're capturing all the hype at the top end and all the hype at the bottom end, and you're going to get more fees that way. Or if liquidity over, say you only got 15 minutes and you think this token's going to go into a range pretty consistently for 15 minutes. Maybe you select spot because you want to be just capturing fees throughout your entire range for that entire period of time. So ultimately, like the strategy you pick depends on the market conditions. It depends on how the token is behaving. There's different ways where a curve, like in an ideal world, like you're doing a curve strategy and you're maximizing your returns when the token is experiencing its top volume. But there's more risk with that, and that's why we have the other strategies. If you want to be a little more conservative, great. You can try capturing when the price of a token dumps with a bid ask. But yeah, we'll tell you like more about how we like to play different tokens, Batman and I. And as we get into the live demonstration, maybe we'll be able to commentate why we're curving, why we're bid asking, etc.
Oh yeah, no, I think that would be great. Because I think theory is all fine, but when it comes to actual practice, a lot of theory can sometimes go out the window, right? Um, but let's go ahead. So this is a very important thing to actually know. So this is us breaking down the bin steps. So these are the bins that you saw here on your strategies, and these are just little containers of liquidity that can hold an infinite amount of liquidity in them, essentially. So currently there are 69 bins per position. However, in an update that's going to be coming out soon, this is actually going to be increasing to 1,400 bins, which is going to allow for a lot more fidelity when it comes to opening positions. But for now, it's 69. In this example here specifically, we have a 20 bin step pool, which means that there is a zero point 0.2 price, 0.2% price increment, both going up and down on the token. There are multiple bin steps available in the recent update. They released so many, it's hard to list all of them. But here we have a few examples for various bin steps. So you've got 4 bins here, 20 bins, and 100 bins. Um, the the higher you go up in bin step, the greater the price differential between each bin. And of course, the lower you go, the smaller that price differential is, and you capture uh, more price movement, more small price movement. So, which is great if you want to do something like Sol USDC, which has a very high liquidity and a high market cap. You will find that as both liquidity and market cap go up, you will have to go down on the bin size just to remain competitive with other swaps out there. Um, of course, like I said, there are always edge cases when it comes to providing liquidity. And sometimes, if you are able to provide a lot more liquidity, you can still remain competitive at a very high fee price point. Just because, like I said, the things like the Jupiter router really prioritize liquidity. And if you can offer great liquidity in a specific price range, then I mean, you probably will have trades routed through you. But essentially, this is kind of the bin step breakdown here. When you're playing those low market cap tokens, you can kind of see if you go on the lower bin step side. Uh, you are going to get scaled out very, very quickly, which is why you see on things that are like sub 100, or sorry, sub like $1 million market cap, you'll find that a lot of the pools that people are playing are typically in the higher bin step range, just because for, say, example, uh, 100 bins, right? That's a 1% increase on each bin. So effectively, you're covering about like I think around like a 70% increase or decrease in the price, uh, which is great for a sub 1 million market cap token where like volatility could cause a 10 or 20, 30% candle. And if you went in there with a 20 bin step, I mean, you're going to get scaled out in a second, which is very dangerous if you're especially playing something very, very risky like a curve. Um, but that's essentially the bin step breakdown. It's very important to understand this because we see a lot of times that people will go into, say, a 100, 200, 300, 400 bin step pool, and they're always wondering like, why are trades not routing through my pool? Well, that's because in like a 400 bin step pool, for example, that's a 4% increase or decrease from every bin in price. And you essentially are just providing liquidity in very large blocks. And it's not as fine as, say, a 100 bin or 200 bin step where you're capturing more price deviation. So if it's trading, say, between 1 and 2, right? If you go into a 400 bin step, I'm just making up numbers here. You're only providing liquidity for the price being at 1 or 2. If it's at 1.3, 1.4, you're not actually providing liquidity at that price point. And so a lot of people will often think like, wait, it's trading here. Why am I not getting liquidity? Well, that's because you're actually not providing liquidity at the right price point. So that's why you often have to juggle and find a good pool that is getting a lot of trades through it. And more often than not, those really high bin step pools likely won't see that much volume. So you're kind of just sitting there on your hands most of the time, waiting for something to go through. And that effectively can kind of give up gains if you're just sitting around. So it's kind of a delicate dance at times to try and find the best pool to go into, and we'll show you later on during the live demo session how Starseed can help with that with our top pool screener. But yeah, that's basically the bin steps and it being broken down. Um, Next up, we have our liquidity window. So this is where we will be adding a position to open up our position in this pool. So here you can either, like I said, go token sided, or USDC or Sol sided, um, and open up a position that way. Uh, Under here, you'll see these gray bars that are under the bins up top. And this just represents how much liquidity you have in each of those individual bins uh, relative to everyone else in the pool. So that is actually a very important thing to also keep an eye on, because a lot of people will provide liquidity on those very high market cap tokens. And then they wonder, like, why am I only getting a dollar or $2? Well, that's because in the range you provided relative to everyone else, you actually only control maybe 0.2% of each bin, which might not actually be much, especially if there's like thousands upon thousands of dollars worth of liquidity. So you're only getting a small piece of the pie. Now, of course, what you can do, and we'll go into greater depth here, is you can play around with the min price and the max price, which is the minimum and maximum price range of whatever liquidity range you want to select, or the token price range. So if you make that smaller, then you're actually concentrating your liquidity in a smaller number of bins, which means you are going to control more of that specific price point, which in turn translates to more fees earned. Um, but of course, if you go smaller range, then you will run the risk of getting scaled in or out quicker. But of course, like Razor said, we'll go into various methodologies to essentially try and open up a pool at a good range, at a good price action point that can help minimize stuff like that. Um, and like we said, to the next point, 69 bins per position right now, but that's going to increase to 1,400, I think, next week. And that's really going to change how the game is played, because, like we said earlier, actually, the 20 bin step, right? It scales you in and out very quickly because it's only 0.2 price differential between the bins. Well, now with the 1,400 bins, you're going to be able to actually have a bigger position, a bigger single position where the meta might change. The 20 bin step pools might be some of the most popular ones if you can go the full 1,400 bin steps. Um, So that's going to be very exciting to see how that stuff changes, and of course, we at Starseed, we're going to be on top of that stuff since we use this product daily. Um, and the next thing to move on, the next point is that you do need Soul to open these positions, and you have both a refundable and a non-refundable deposit. So the refundable deposit is around zero point 0.6 Soul. sorry, 0.06 SOL. 0.6 SOL would be wild. No, 0.06 SOL refundable fee. And that's just the rent fee. That's a typical Solana rent fee that you have to open up an account. And once you close your account, you get that 0.06 SOL back. The non-refundable amount is a 0.07 SOL amount, and that's SOL that you would pay to open up a new bin position. And not everyone has to pay that. The only person that will ever pay that is the person that's opening up the pool in that specific price range. But once someone does that, you can enter and exit that pool and not have to pay a non-refundable fee. So say, for example, I opened up this position that's in this image here. I pay the 0.07 non-refundable fee for this specific price range. If someone else like Razor were to enter here, he wouldn't have to pay that. So that's a great system that they have. It's essentially just one person has to pay that creation fee. And I think this probably is a good point to also mention some risks with DLMMing, just because with any kind of trading, there's always some sort of risk. The biggest risk that people always talk about, and one that I personally don't think is that scary, is IL, or impermanent loss. You also see some people call it divergence loss. But essentially, with impermanent loss, in really basic terms, it's just a price deviation between the two token pairs, in this case, SOL and USDC. But of course, if you go with the USDC, it kind of lessens the impact of IL. So let's just say if it was SOL and something like Jupiter or Fortcoin, basically both tokens can go up and down while it's in the pool on top of the swaps. And that kind of introduces something called impermanent loss, where you just have a deviation between those two token pairs. And essentially, there's no way to avoid it. As soon as you go into a pool, you're going to start experiencing some level of IL. The beauty of DLMMing compared to those constant product AMMs that you typically see with uh, the other products, is that the fees that you earn here, depending on the concentration of your liquidity, can actually quickly overcome the IL to the point where you might even have positive IL when you exit the position. Like I've been in uh, in situations where um, I've come out on top just thanks to IL, where I've gotten fees, I've pumped out of my range to the upside, and I've come out with more money than I have fees just because SOL value also ran up. So there are ways to mitigate the risk of IL. I think it's kind of overblown personally. Um, that being said, it really comes down to having a good trading strategy in place just to limit those kinds of risks. And we'll go into that philosophy a bit more as we do our live trading demo. I also think that typically you'll see the IL in the beginning stages of your position, um, like within the first, I don't know, couple minutes to hours, and then as soon slowly as those fees accumulate, you'll see that IL kind of decrease. Um, but yeah, it's not something that you should totally be scared of, especially when it comes to DLMMing. It can be overcome thanks to the fees.
It's kind
Uh,
of something we muse about with DLMMing because you earn your fees based on the swaps moving through your different bins. And if you put up a soul-sided position, well, if you want to earn any fees, you kind of have to let the price of the token dip a little bit so that you earn fees through the swaps going through your bins. Um, Obviously, we hope the price of the token goes back up so that you can exit and just have the fees. But the only way you make money is if the price of the token fluctuates.
yeah, no, it's actually kind of funny. Ever since I got into DLMMing, I'm actually kind of happy when a token nukes, as long as it's going through my range and then of course going back up. But yeah, that's pretty much it for Meteora. and covering their system. Sorry, I went ahead there. We want to give a quick shout out to the LP Army. This is just the community of liquidity providers on Meteora. Fantastic group, so much alpha in there. Great traders, great education. Definitely check out their Twitter, check out their Discord, join it. We actually have a channel in there too. So if you want to talk about Starseed, you can come to the Starseed channel. We're in there. Um, Fantastic group. And then, we've got to give a shout out to Heavy Metal Cook. He's one of the boot camp instructors. He's an LP Army lead and a mod on there. He's amazing when it comes to smoking briskets and lifting weights. This dude is an absolute legend. His boot camp has turned thousands upon thousands of users into strong LPing gods. So I would definitely check out his boot camp and take his course, fill out his form, just so you can also join the LP Army. It's to your benefit, just because it's, like I said, a great group of people. And we bleed Meteor over here, so we want to grow the community together. So check out his bootcamp as well. It'll go into great depth and cover things that we may not have, just because we wanted to give a more cursory look to Meteora. But that's it for the first edition of Starseed Academy, the basics. Now go out there and LP like a champion.